it's really a pleasure, and this is the first webinar that I'm doing for 2022. I'm Hervé Legendre and from EIPM. I'm really glad to be with you today on this topic of risk management. Let me just, get the presentation started. So in terms of the webinar, please feel free to use the chat. You can share any of your thoughts, questions, reactions, anything that comes to your mind. We might, wait a little bit to answer some of them. We might just pick some of them as they come. So we'll be doing all this throughout the whole session. In terms of who's going to be with you this afternoon or this morning for people from South America, because I see a few participants from South America. So I'm Hervé Legendre. I'm EIPM Research Director. I'm very glad to have with me Jean-Philippe Collin, who's not only an EIPM Emeritus Professor, but also someone who's been leading a number of procurement and business organizations over the past years. And maybe I can let you introduce yourself, Jean-Philippe.
Yes, good morning, good afternoon, everybody. Yeah, indeed, I am Jean-Philippe Collin. So I've been in the industry, in various kind of industry for the last 40 years, 17 years as a chief procurement officer of companies like Valeo, Thomson, Sanofi, PSA, and more recently Sanofi. So I'm quite passionate about procurement and what we can do to transform not only the function itself, but also the company and the way it interacts with its ecosystem of suppliers and partners. I put myself on mute again, Hervé, to facilitate the exchange, and we can start.
And myself and Jean-Philippe, we've been working on the topic of risk management over the past few years before we started on the COVID. It was, dating back to a time where we realized that the companies that are the best scores on the EIPM Peter Krajic Award were companies that were continuously investing in risk management, while for some other, there were some ups and downs in terms of the level of investment in the topic. Today, when we are going to look at this topic, we want to take a perspective where risk is not just about, troubles and disruptions and problem, but we want to see it and position it as a real opportunity for organization to bring added value, to make a change, not simply from a procurement standpoint, but really from a business standpoint. We want to come back on some of the lessons learned over the past years and the importance of understanding our market cycles. And we'll be looking at some risk management foundations, but also risk governance. So we won't be giving you like tools and templates, but more, some of the reflection from our work on how can we really move further in terms of orchestrating a very solid resilience capability, a strong risk management capability within an organization. The first point I was mentioning is really this, looking at risk from the upside, from the opportunity side. So this year it was really fascinating. We had, as part of the Peter Krajic Award winners, one company located in Turkey, and this company is active in the paint sector. And the business has been growing its sales by 31% in 2021 and 73% in volumes and in revenue by 73% because of all the price increase that have been coming into the game. So this is something that's really significant, and this is something that was made possible because of the procurement team. The competitors, the other company in this sector have been extensively, suffering from shortages, while this company, Dio, has really been able to, in all situations, ensure that they wouldn't be losing any customer, they wouldn't be losing any sales, they wouldn't be losing any production, wouldn't have any production stop, and they were even able to launch 3 new products during this period. So also, being able to make some new moves in terms of innovation. And how this was done, and this was really by having a procurement team. And this is not a huge organization. This is 17 people, 16 women in this procurement team. And I have been working closely with all the stakeholders to be able to, search for alternative when it was needed, but also working with stakeholders, changing the contract they were using, changing the commercial models, pricing mechanism, whenever that was making sense for them, looking at where they needed to have some inventories and where it was less significant. But working together with the broader ecosystem of internal, external partner, they were really instrumental in achieving these results for the company as a whole. And that's really a very important point. We can look at risk, from how much we're going to be losing, or we can look at it, how much we're going to be able to win out of the situation. And if you have this strong focus on building relationship inside, outside, if you've got this team with strong determination, professionalism, systematic, adaptable, this is the kind of outcome you can have in a period of risk. So a very positive message about the impact we can bring to organizations. Maybe before asking Jean-Philippe to react, so we've seen a situation over the past 2 years where companies that have been adopting best practice in terms of managing risk, they've been able to carve out some very specific periods. So like, every Monday morning or every, 2 hours, every 2 days, specific period in their agenda, focusing some of the team on handling some of the immediate challenge and having other time of the agenda being dedicated to other projects and more longer term perspective. The speed was of the essence. We've seen situation where by being able to anticipate by 2-3 weeks something that was going to go wrong, some companies have really been able not only to be able to protect the company, but to further gain trust and loyalty from suppliers by being ahead of the game, anticipating, helping the supplier, and really, showing leadership in this situation. And very important point, market knowledge, solid relationship. And a solid relationship is one where you even ask advice from the supplier. What do they see coming at in the next 3 weeks, in the next 3 months, in the next 3 quarters, to be able to prepare your own plan and making sure that they have you in the mind and that you get over time through the good relationship this preferential treatment. Jean-Philippe, any reaction you would like to have at this early setup?
Yeah, can you hear me? So if I may add something on the introduction of Hervé, I think risk management is about making a company more robust, less fragile. And guess what? It's also a topic of the board of each company, the board which is representing the stakeholders and the shareholders of the company. More and more, risk management is seen as a long-term asset, associated with the supplier base. Okay, so that means that it's not only an operational and a P&L kind of attribute of the performance of the company, but it's also seen as an asset protection mechanism to protect the shareholder value and increase it over time. It's also indicating, your example is also pointing out that risk mastering is about creating a differentiating advantage versus the competitors. Okay, so it's not only being good and best in an absolute value, but it's also being just better than your competitor, getting access to the right level of sources, getting the right support from your supplier, better support from your supplier versus the competition, being able to react faster than your competition, being able to extract value from the supplier relationship at a higher level than your competitors. So differentiating value and long-term value, making your company anti-fragile, more robust.
Thank you, Jean-Philippe. In terms of some of the learning from the past 2 years, I think a lot of people have been telling me, we were facing a black swan. It was impossible to predict that we were going to be in trouble in terms of, shipping stuff across the world, transporting some of the goods from one place to another. Or there was also a lot of people saying, we couldn't anticipate on the semiconductor industry and the difficulties to get access to chips. Well, in reality, if someone was paying attention to the market cycle, this was something that was, in preparation already 4 or 5 years ago. So when you look at the evolution of investment into the infrastructure for the global transportation industry, actually, there was another capacity that has been building up over the years till 2017. And 2017, there was reaching a point where there had been so much investment over the years that we started to see one of the South Korean big shipbuilding, ship-owning company going bankrupt. And this sent a signal to the market that really overcapacity was reached. And over the following years, there was still a growth in terms of the number of ships on the market and containers and infrastructure for harbor. But the growth was slowing down when the trade of goods across the world was still going up at a significant rate and above, the level that was existing in that industry. So in any case, the signals from the market were here before the COVID. And it's true that, they were exacerbated, the situation, because of the COVID period. But this was not something totally coming out of the blue. This was something that was on its way for quite some time. If you look at the semiconductor industry, if I look back at this document dating from 2018, well, there was a big plan in terms of investment, in terms of increase of the sales. There was still some growth in mobile phone. Computers were stable, but this is the time where we saw a massive development in the field of embedded. Some of the semiconductor we can use for industrial application, for automotive, from many other type of product, artificial intelligence as well, that require a different type of a processor. So really, the information about the market was, it's going to grow. There will be increase in this market. And at that time, we can see it on the right part. This is ASML. So this is the company who's producing the equipment, production equipment for microchips. And they had a situation where there wasn't so much sales at that time compared to the growth that was coming. And after there's been over the past years some major revenue being made there because there were some very big requests being made by chip makers. And it was interesting because in 2018 there was the China US conflict, and when the US asked the Dutch government, can you signify to this company ASML that they shouldn't be exporting anything to some of the Chinese company? Well, actually, the president of ASML didn't come out complaining about the impossibility of doing business. Simply said, I hope in the future common sense will prevail. So I understand, and that's okay. I hope we can get to a better and more open situation after. So why? Why didn't we see a bigger reaction? Well, simply because the book order, the the demand for this company was huge, and they knew they wouldn't be even able to deliver everything that was coming up. So market expectation, we knew from 2017, 18, this was going to be big. And at that time, there was a low peak of investment while things were going to come at a later stage. So all the signs were here for people to understand the market cycle, that there would be around this time some difficulties. And there's much more situation that, much more information in this industry that's really showing that this was predictable, some of the shortages experienced in the automotive sector, for instance. So read your market cycles, not just the state of the market at a given point of time, but understand the dynamic over the years. Jean-Philippe, I don't know if you've got some reaction to this point. Maybe some of these.
No, I think you're right. I mean, looking at the past and looking at the cycle specifically for heavy industry is full of information, and you can really kind of anticipate a little bit more and increase your level of mastering. While there are always unpredictable things where responsiveness is important. So risk management is a combination of anticipation and I would say reaction. Okay, and what makes the difference is the company which are anticipating a little bit more and better than the others, and the company which are reacting a little bit faster than the others. So keep in mind that this two turbo, if you want, proactiveness and responsiveness will be the two turbo of your risk management engine, if you want, taking an automotive image.
Thank you, Jean-Philippe. So maybe a few words. So the definition of risk is simply anything that could be impacting on our goals, on our objectives, on the targets we want to achieve. Within a procurement context, we are not here to look at procurement risk or supplier risk. We're here to consider all the risk anchored by our business, by across the industry. So this is not just about paying attention to dependency, paying attention to a specific point, but really having a holistic perspective on the risk we could be facing. And typically, any good risk management organization implementation, will require to define what is, the risk framework, what are the different topics, themes that you would be looking at as part of your supply chain risk management approach. If you have an enterprise risk management function, typically they would have that at the level of the company, and then there would be a dialogue to come up with a specific version of it for suppliers and the supply chain and procurement function. At the same time, if you don't have this view at the level of the fuller company, you need to build your own framework that's going to list all the risk categories. Some of them will be common across companies, we'll find them everywhere. But others will be more specific to a single industry. Also, sometimes you might add to a specific category some of the elements. So make sure that you have a framework, make sure that you've got a way of looking at all these risks and some data at end for each of these risks. Maybe I'm just going to continue on this point. Very often, people have been trained according to the risk management methodology to look into what is the likelihood and what is the impact. So the impact is all about understanding, what we could be losing in terms of cost, but also losing in terms of revenue, the whole financial implication of an event that will be treated as a risk that's likely to happen into the future. And the second dimension is really to look at the likelihood. So that event, that might have this impact, how likely is it to occur into the future? And many organizations have been investing in the effort in order to map the risk and to position them to develop mitigation strategy, redundancies for risk that would be pretty sure to occur, and maybe some simple contingency planning or crisis management. So how do you more the responsive side versus the anticipation side that Jean-Philippe was describing. However, one of the key elements that we've seen over the past 2 years is the other dimension of understanding risk, which is the detectability and the speed of reaction. Okay, so if you take two companies facing exactly the same risk in the same sector, within a few weeks, you can reach a totally different outcome. If one of the company is informed before the other from the supplier that there is still possibility to find a way to handle the situation, and then very quick to implement, the countermeasure and being able to go to, the alternative solution, then, you can get very strong out of a situation. If you are the last company to be informed about what's going wrong, and then it takes you a lot of time to decide who's going to be in charge of handling the situation, then what you have is you're the last one to be looking for an existing solution, and you accumulate all the troubles. So being able to anticipate, access, detect risk before, and being able to quickly react is absolutely essential. And we need to factor that much more in our understanding of what's happening on the risk landscape and understanding, how effective we can be by making this happen. So every time when you have on your risk log, whenever you see risk, try to say, what is it that helps us to detect it, and how quickly, what would be the time needed to recover, the recovery time. That's absolutely essential to understand this element. Or ask supplier, if you have a fire on a major line at your production line, what would be the time to recovery? How much time it will take you to, go around that situation? These are very important factors in understanding risk. Jean-Philippe, any reaction on this element, on the foundations?
Maybe two remarks. First about, I mentioned proactiveness and responsiveness, and there is a kind of a proactiveness where you prepare yourself to respond quickly. In other words, if you take still the image of the firefighter, you make sure that you have firefighters, they are well trained, they are well equipped with the right equipment. That means that you proactively think out the way you are going to react to a certain level of risk, to a certain kind of risk which may occur. Sometimes you have a risk which is completely unlikely, but what makes a difference is the way you are preparing yourself to react. You react before the others. We saw recently a company. I think there was a discussion with us as part of this risk approach, which were preparing themselves to react by having a full map of where their suppliers' sites were residing, where the supplier site of their supplier site were coming from, and they prepare centers to react on any kind of geopolitical situation and so on and so forth. But they were really prepared to react. They didn't know what would be the risk itself, but they were prepared to react. That's the first remark I wanted to say. So there are two kinds of proactiveness. Proactiveness in terms of how you avoid the risk, and proactiveness on how you prepare yourself to respond quickly to a risk. Second remark is the fact that whatever is the risk mapping or the risk scoring by likelihood and impact, it's a collaborative work. it's not just procurement in its silo, working it out. It's procurement together with manufacturing, if it is an industrial company, together with R&D, if it is a technology company, with IT, if we are talking about cyber risk, for example, or of course marketing and sales and communication and the compliance officer of the company if we are dealing with compliance or reputational risk. So you see, it's also calling for the natural capability of procurement to work collaboratively with other functions and be able to orchestrate this exercise throughout the company.
Thank you, Jean-Philippe. So one of the we've done quite some work, and there's much more information on this in some of the documents that we've been putting together. But we've really tried to understand, why risk management is failing. Why do we fail with risk management? And we've identified a number of a topic, and we're not going to go, in full depth about all of these today. But for instance, I think we are a lot of situations where we have a lack of industry collaboration. So whenever we want to
Hervé,
give...
I don't know if it is just me or it is general. I cannot hear you.
Can you hear me? Yeah, I need to try to talk if I want to know if you can hear me. Yeah, Fred? Okay. Okay, good. Thank you, Alfonso. So lack of industry collaboration. So sometimes you need your client because you might have some of the specification that have been agreed by one of your clients. And this can happen in some water infrastructure. This can happen in the railroad rail industry, for instance. And that's absolutely essential to have a good quality of collaboration, not simply inside the company, not simply with the supplier, but also is with some of the clients. In order to be able to map really some of the risk, it's really interesting to be able to, for instance, to gain access to the GPS coordinates of your tier 2 supplier. So this is something feasible. You can ask your supplier to provide GPS coordinates. And whenever there's something happening in the world, you're able to, map will there be some sources of supply that would be coming through that country, for instance, or from this country or through that country. And there's a lot of resistance today. Companies don't want to share these types of information. We don't have yet the technology in terms of the maturity to use the right technology in terms of blockchain to be able to get to that level. But this is something that's really diminishing the possibility in terms of having visibility here. After another one that's very important for me is, and we had another webinar about a year ago on the topic, which is really to measure not just likelihood and impact as 1 to 5, but really to quantify and to be able to go and measuring the value at risk. So really putting a dollar figure or a euro figure or whatever currency you want in terms of a risk, and being able to take into account through the TCO, the cost impact, being able to take into account the business impact. I think that's absolutely essential, to be able to really get a sense, of what are the true impact. Out of this, you can measure the cost of implementing either, the mitigation strategy that help you to anticipate, or what would be the solution if something is going wrong. And out of this, you can put together a return on investment, really look at risk as an investment with a profitability rate, a return on investment that would be very useful and very important. This really helps in terms of making the analysis more strict. Poor analysis can be tackled as part of this. It can help with the poor decision making and help validate some of the risk. That's one of the important aspects here. Jean-Philippe, are you back with us? Do you have a bit less noise? You want to react also and share on some of the points?
Okay, Hervé, I cannot hear you for any reason. So I'm just make comment on this chart, page 11. So I think, generally speaking, in the company, we have seen many reasons why there is a lack of risk mastering, the risk awareness. So there are multiple factors to explain the situation, and it's all put in that chart and the next one. I think, generally speaking, there is rarely a company where there is a true risk operating system, which means a combination of tools, system, process, training, management objectives, and rituals in terms of business and management. And that encapsulates a lot of things. I mean, you see that on the chart. I mean, lack of governance, lack of training, lack of visibility, lack of tooling. So it's about a complete operating system. So you need to have a process, you need to have rituals, you need to have sensors, and you need to have a governance, and it should be a part of the management ecosystem, which is about giving objective, measuring the results, and improving it over time. Okay, and that's what we can see on that chart and the next one as well.
Yeah, thank you, Jean-Philippe. And I think, the 2 points about culture and governance, and there are ones we're going to be going into. Oops, what's happening? Okay. Yeah, so I was saying that I wanted to say a few words about the culture. And think, that you have a culture that's really positive related to the topic of risk, where you listen to the people on the front lines. You listen to the people that have very operational role, and you pay attention whenever they're bringing some of the early warning signals, some of the issue they're seeing in the field, and they're bringing it back, to the decision makers. That's absolutely essential. It's also a point of welcoming people that are helping to anticipate, helping to understand. If you don't have a culture where this is valued, then this is very challenging. You need a culture also where people can work collectively, not to define where to prioritize, where to act, but also that are able to rapidly put together a team that's going to be addressing the situation and implementing the solution. In many companies, working on the next generation of product innovation may be more attractive to some people, but if no one, is working on addressing some of the short-term technical changes you need to make into specification, the product, changing materials, for instance, this is something that's really a challenge here. So we need a culture where also there is an attitude, a positive attitude in terms of putting together the right resources to address some of the situation. And how do you build that culture? This is through governance. This is through the rituals that you're going to implement. The weekly meetings where you're going to be looking at immediate problems. You're gonna have like also maybe a monthly meeting where in some companies you bring all category leaders plus stakeholders, and you go around the table and you're sharing about early warning signals, new behaviors in the market, new things happening, new information coming out of your dashboard that's helping you to have visibility on the risk. Oh, that's interesting. This is a supplier. Usually, they never change the order date, the delivery date for what they deliver to us. And there has been, more and more issues recently about that. Or, we have seen a case of force majeure here or there. We should be paying attention to it. So really having this monthly meeting where people can openly share what they see happening on markets, what they see happening on every side, and making them open to everyone. Quarterly meetings where you are really taking the time to map the risk, reassess where they are positioned on this likelihood and impact. So you really set priorities. You really understand what has changed compared to last time. And let me go back. And from this, having the possibility of maybe on an annual basis, looking back from all the information you have about competitors, about suppliers, and revisiting, some of the list of risk in your category strategies, in some of your supplier relationship framework, and so on. So I think culture and governance, they go hand in hand. They play a critical role in terms of taking things forward. Okay, let me go back. Some of the key principles: solid accountabilities, formal rules. This is not by luck. This is by process that things are working. People are accountable to finding risk, and people are accountable to solving the issues. It's important to be able, as much as possible, to leverage data in real time, so you're able to visualize, if you're a product manager, how much your product has supply risk in it. If you are just purely on the supply side, you have the supply view from your category perspective. If you have a product perspective, then you have it from the product perspective. So real-time access to information, that's the trend into the future. And being able to, what's happening with the slides? They're going fun. Being able to, at the same time, look at the data from different perspectives, that's important. So solid accountability, improve visibility. I just mentioned some of the key points related to this. Collective intelligence, working together across the company with suppliers, but also the broader, sometimes the client, and having the culture that support people perspective with education and elements like this. And this, agility, whenever looking at risk also from the positive side, and making sure that we have methods, tools, accountability, autonomy that really help to address things. What has happened during the COVID period, many organizations have simplified their decision-making process, implemented e-signatures, for instance, because of work from home. And I'm hearing of companies that have been, making again their decision-making process more lengthy, and taken out some of their digital tools and going back to some, silly manual process for acceptance. Being agile is really getting rid of all these things, trusting people to be accountable, but also simplifying some of this process. Jean-Philippe, do you want to move to the next one that I will let you go through, or any things you want to share? So maybe, I don't know if we have any questions so far, because in terms of time, we're doing good. So yes, we will be sharing the presentation. You will be getting access to the slides. We've been also putting together an observatory about this topic. So you will find some of this document, but a little bit more information as well. That's available on our website. So in terms of how to get into an action mode, we've prepared and together with Jean-Philippe and this kind of 12 questions that can really help you to take an audit of your risk management capability. So you will find here some of the elements that we've been mentioning before. But the first point, do we have a formal risk management process? Is this something that's happening at the level of the company, at the level of procurement, because we have a systematic and structured way of doing it, supported by tools that are providing the data? Do we have a risk profile, whether at the level of supplier, whether at the level of a purchase, whether at the level of a category that can be, different from one industry to another, one type of purchase to another? But do we have clearly regular reviews of some of these risk profile? And that's part of regular and recurring meetings that we have in the organization. Is this built on a true collaborative way with the other function? So this is not a battle of risk between functions. Me, I'm looking at it from a procurement standpoint. They're looking at it from an operational standpoint. They're looking at it from a customer standpoint. This is a recipe for failure. But do we have within our process, within our practice, a real collaborative approach to, bringing all these things together, sharing information and deciding together on what's important for everyone to achieve? Is there a chapter in each of your major sourcing strategies really relating to risk? And here I would say it's not like having one page that explains all the risk if you don't do the strategy you prefer, but it's a true and honest overview of all potential risk on the table. Frédéric, tu peux arrêter avec la souris? And being able to have these elements at end as part of our category strategies. So we need to have budgets that allow to invest in searching for alternatives, then have strategic plans, then have some, I would say, redundancies, that have some slack resources that can really allow us to be able to address. If we are really working with a logic of there's no extra resource for whatever is happening, this will not be helping in terms of making the change. We need to be able to get resources to validate solutions quickly, suggested by supplier, for instance, if they propose to make a change. We might have, I've lost the presentation. We might have other, ways of accessing resources across the organization in order to be able to deliver whatever is necessary to address some of the risk. Job profiles, is this part of our goals? Is this part of our job profiles? Is it part of our education program? Do we recognize people that have been putting on the table some of the key risks that we've been able to address and anticipate? Do we have any incentives that are supporting people that are working in reducing risk or looking at opportunities out of risk? Are risk methodologies and tools addressed in procurement, education, and training? I mentioned that before. Very important also, looking at the past, what has your other business unit, what's your company been going through? Maybe also looking at your competitor, what have they been facing? Jean-Philippe this morning was telling us about a company where, they were not impacted by a cyber security attack, a ransomware, but their competitor was. And the key things he was mentioning was like it wasn't because of the company had taken the right measure. They've just been lucky of not being impacted. So keeping an eye on some of your main competitor, understanding what's happening to them, having some, sometimes simple kind of a newsfeed tool that provide a few regular information about what's happening with your competitor can be a good source, not just supplier but competitor, a good source of information, a flow of information you want to have a look at on risk. You can build that very easily with a newsfeed reader, for instance. Huh? Also, you have opportunity to present your risk plans and risk profiles at the level of the COMEX and the board of directors. This is something, as soon as inflation is kicking in, it would be absolutely expected that this type of risk are presented at the level of the COMEX, the board of the directors, where decisions are taken to build the right, cross-company collaboration and taking actions to address some of these elements. So this is really a sign that things are going in the right direction. And whether we're looking at, after the pandemic, or whether we look at after the current situation we're going through these days, is our company changing sensitivity to risk appetite? That's absolutely essential. And there will be periods in the history of a company where we'll be interested to take certain kind of risk related to maybe innovation. But there's also periods where we want to reduce significantly our exposure to risk and better protect the assets, better protect the investment, better protect, all the stakeholders, sustainability and shareholders of the company. So 12 questions that can help you screen where you are, that can help you to share what you've been doing and what could be done into the future. Pick a few friends working in different industry, discuss, all of the answers to your question. This is always useful, in terms of planning for tomorrow. Again, for me, I've got plenty of data. I've not shown it today. That's really demonstrating that 95% of companies, they invest in risk management in specific periods, like when there was the euro crisis, for instance, a lot of investments about understanding the cash flow position of the supplier, financial risk. And then after 2 years, nothing else. So disinvesting after a period of risk has been here. Companies that are really making a difference on the long term on their market are companies, and we've seen that through the Peter Krajic Award winners, they're companies who are continuously investing. If you invest in risk, you know what's happening in your market, you're listening to your supplier, you pay attention to early warning signals. It's not just about avoiding to lose money here, it's also about understanding future opportunities. So that discipline, that exchange, that collective efforts to make something happen is not only good for the profitability, but it's also something that's absolutely essential for the growth of the organization and for protecting stakeholders and helping to address some of the sustainability challenge ahead. That's all I wanted to share. I think we've lost Jean-Philippe, who had some connection issue. Happy to answer any question, listen to your reaction. This was the idea of sharing a few slides on this topic. I don't think there's something hugely new, but the ability to do that in a systematic and structured way with the right mindset, the right culture, we can make it happen, by showing examples, by being organized, having these different time periods that we address what matters. And I'm sure, this is a lot can be achieved just by starting to set the example, doing things in a structured and organized way. Okay. I'm staying here if any of you, still have a question. It's been a pleasure to be able to, share on this topic. And I hope you also enjoyed, that you learned something out of it. We will be having a more session into the future on different subjects throughout the years. Some of them looking at I've got a question. I have this is Alberto. Hello, Alberto. Is there any example of how it looks like a procurement risk profile tool? Well, I mean, you can simply have, a few slides that are going to position, likelihood, impact, different numbers of risk. And then you might have a second page, that would be providing to you any understanding of the early warning signal that you might want to look at, and maybe some predefined countermeasure that you could be implementing. So this is what I call the butterfly of risk. So you put the event in the middle. What is it that's helping us to detect it? What is it that's helping us to visualize, to sense something is the root cause? And then on the other side, understanding how we can the impact, the likelihood, but also, what are the immediate actions, or what would be the countermeasure we can put together. I think that's really the most classic. What we have now is more and more visualization tools. We've got more flows of data. So what we see coming up is a number of a supply chain tool that provide, real-time visualization of some of the risk. It's still not super mature because of the difficulties of providing, easy to read, easy to access information that can really help people at a very operational level. Some of the systems are being improved on a regular basis. A few companies have done outstanding work in this field, but we are still lagging behind for many others, and waiting for the right system to help, not just to bring the data together, but also help visualize real-time data in a way that's going to be easy to act upon it. So what we see in some corporation now is not simply, having on a phone access to some information, but much bigger screen, that's more like a Star Trek central command post than, something on your mobile phone, where a few people are able to have conversation at the right time of the day. They're able to see about alternative routes and things like this. So these are some of the most advanced tools that we are seeing, supported by digital solutions. But I think risk profile, keep things simple. What are the key questions we want to answer about a specific risk? Putting this across 2 or 3 slides. I can share with you, Alberto, this butterfly slide that I've been using, one page. Everything one page. That's always the big thing whenever we want to address this situation. Any other questions, reactions? If not, I wish you a fantastic end of the day, whether this is for you the morning in South America, or whether this is Luis Torres. Yeah, what I can do is I can add to the pack of slide. I can add I can send you a few more elements on the butterfly. VUCA time. How often do you recommend to review our risk profile? That is for you. That is for you to set. Depending of your understanding of the pace of change. What is happening? There's a general tendency to try to move to get access to more and more real-time data that helps to update. But we all know that data is not always clean, that data is not always, apple and apple, but is sometimes apple and orange. So, this would be an ideal world if we would be able to have as much as possible this. But I think, big picture at the category level, I think you need to have maybe a yearly, review of the major trends that are changing the situation. At the level of a procurement organization, what I see usually is revisiting priorities every quarter. So every 3 months, coming up at the level of the full procurement organization with the, maybe a 10 higher risk that you want to dedicate more attention to, for instance. And, some of the others, you might have weekly meetings during crisis situations in order to really monitor evolution of some of the signals that are important. I think that's also a message I didn't share. This is something I've said so many times about the past 2 years. We are moving from a world where everything was about the year. So what's the annual clock for supplier relationship management? What's the annual targets? What is the annual, set of projects that we want to implement? We're moving from this logic of seeing everything through the year to managing different time horizon. Being able to dedicate time to look at immediate and urgent things during the week. Being able to dedicate resources and time to look at what's going to be happening in the next 3 to 6 months, and keeping time in the agenda, keeping resources, looking at longer term perspective. And that's a discipline of time management that's absolutely essential these days. It's not just about how often I look at something, is how do I get organized so I keep an eye on things short term, mid term, and long term, so I'm able to make progress on all these dimensions in parallel by being more efficient in my way of getting things done. So never let anyone pollute, a long-term meeting with a short-term issue, or don't go into, mid-term issue in a short-term meeting. Make sure you really segregate, you organize in a very structured way all these sessions in order to deliver, the best in relation to the time horizon you want to look into. Probably the biggest point that I've seen over the past years. Great. So yeah, I'll be adding one slide to the pack, and we'll be sending all that to you. Thanks a lot for being with us. We're now really reaching the end of the hour. So thank you so much for being here. It's always a pleasure to be able to share, to, see some names that, I've not, I know from some years. And yeah, have a good day. Bye-bye.